What's going on YouTube? Good morning, good morning. Let's get started. So yesterday was incredibly boring. Nothing at all really happened. So okay. Let's check this out. Nasdaq's like way up there. Nasdaq's at new highs. Oh wow. Okay.
Do we may do papers on it, Marco? Maybe we're going to do papers. I don't even know if you need them. They're not going to be fighting each other. They've had it. They've had a big fight, like two kids in a schoolyard. You know, they fight like hell. You can't stop them. Let them fight for about 2-3 minutes. Then it's easier to stop them.
Then Daddy has to sometimes use strong language.
You have to use strong language. Every once in a while you have to use a certain word.
I think we have to join the others.
I mean, we may do papers on it, Marco. Then it's easier to stop them.
Then Daddy has to sometimes use strong language.
You have to use strong language. Every once in a while you have to use a certain word.
Okay. So we're kind of just waiting for everything to open, guys. So, if you look at all the cryptos, they all swept London. Well, Bitcoin's actually leading, but yeah, New York swept. Well, like, right now we're at the highs of the London, Tokyo, and Solana, or Sui. Here, let me show you guys. As you can see, we're right now at the highs of Tokyo and London. Well, let's look. Oh yeah, we're sitting good. Once we get to like 108, 807, that's kind of where ETH hasn't been moving. Really just Bitcoin. If we look at the Bitcoin dominance, good, stable coins are dropping. Total market cap broke above. Good. Coinbase has been booming. Circle. Pepe. Okay, we got the market open. Oh my goodness. Let's do its thing. This thing could just take off, guys. Everything is extremely bullish. Alright, this is where we could pull back. This could become the orb low. I don't know yet. I probably should wait. Let this play out. Oh, do we have news today? Federal Powell testifies again today, and then U.S. home sales. So we need to be mindful, guys. Yeah, I think this is gonna be fake out. We're trying this. Hey, come on. We probably should just wait for the orb to be formed, but I don't know. Seems very bullish. Okay. Not bad. Up 250. I meant to make an account for Top Step last night. Okay. Dude, why do I keep doing that? There we go. Stop loss at break even. Bitcoin's pulling back a little bit. And by the way, I'm in a Bitcoin long still. But I was in it since last night. Early yesterday. Okay, we're up 350. Could be the orb high. Maybe. Let's keep watching. We're not going to close it just yet. Okay, we're out. Took a little profit. Might have been a mistake though. We'll see. Yep, probably was. Oh well. This could become the orb high. Oh, maybe not. Just have to watch. Oh shit, Bitcoin's popping off. I'm looking at ETH right now. ETH could be decent. I'm gonna take on BitFunded. See, that was the orb high. It could just be one more pump up before we drop. I'm gonna try ETH. I'll be right back. I'm gonna go make coffee, guys. Hold on 1 second. Be right back. This Jerome Powell bullshit is just fucking shit up, dude. Okay. This shit is just so... Just cut rates and fucking... Let's get the market booming, dude. This shit's just getting old, man. Quit trying to fucking please the Democrats, man. We're just hovering on that VWAP.
Thank you, Mr. Chairman and Chairman Powell. Good to see you. I want to start by acknowledging the continued uptake of the FedNow real payment system. I know I've raised the development and rollout of that system with you in many, many hearings over many years.
And it seems like it wants to be bullish. It really does. But it's just so back and forth. I've been getting chopped in this little bullshit. I should have took the $500 trade right here when we came to here. I should have just took that. But I was hoping we pull back and really blow to the at least the top of the orb. And that's mainly my target.
You've talked about this in the past. We've talked about how it can be a the economy, especially when it gets to be very high in terms of balances that cannot be paid. According to the New York Fed, student loan balances grew by $16 billion to reach $1.63 trillion in the first quarter of this year. Data shows an uptick in the student loan delinquency rate overall, the age of delinquent borrowers, and the number of newly delinquent borrowers. The Department of Education, meanwhile, restarted debt collection activities last month, and starting in July, nearly 2 million borrowers could see their wages being garnished. Meanwhile, here in the Senate, President Trump and Republican senators are working to pass this piece of legislation that would limit affordable loan repayment options and make it harder for borrowers to responsibly repay their debt and get back on the path toward financial health. So, Mr. Chairman, you said before in your testimonies that student loan debt can negatively impact borrowers' ability to fully participate in our economy, and that it can weigh down the economy. Is that still your view?
Yes, it is.
And could you just share your assessment, just from a factual perspective, about how this problem seems to be growing at this point in time, and what would happen if we allow all of these borrowers to default?
So the point I was making, I try hard not to comment on things that aren't Fed policy, but I broke that rule in this case many years ago, and so I'll just say what I said now, which is, you can make all kinds of investments, and you can discharge
just came from another committee where I'm ranking member, so I apologize if you already talked about the tariff situation. But I know this was obviously a factor that you all had to consider in making decisions about changes in the interest rates. Obviously, there's a lot of uncertainty in the economy. I mean, I'm here in Maryland.
This is a rough day, guys.
You're an economist, you know that increasing tariffs is like increasing taxes across the board. But can you just speak to the uncertainty component of all of this and how that is?
And we gotta be careful with these. They're right at salons at entry again.
Widely that people feel uncertain about the economy, and they do point to tariffs in that answer. I will say though that actually peaked back in April. And it's come down a little bit. If you talk to businesses, I talked to an unusually large number of businesses.
And it's gonna bounce from here and
Feeling
then
is a little
watch.
better now.
It's just like,
They're getting on with it and feeling, but I'd say surveys are still showing depressed sentiment, but it's moved up from where it was.
I would say, Mr. Chairman, in the case of this
I don't know, guys. This day fucked me up.
tweet, that could change dramatically.
Yep,
So
100%.
I appreciate
This day
appreciate your-
fucked me
your
up.
efforts.
I need a Hail Mary trade. I need like one big comeback trade.
Senator Love.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being.
Like, I don't even feel confident about shorting this. You know, it's just,
For the last 4.5 years.
we're below the orb, but I'm not,
It's the bank supervision
I don't know, dude.
as the
I'm not very
bank
confident on that.
So I'm going to focus on bank supervision. First of all, I do want to thank you and Vice Chair Mickey Bowman for ensuring reputation risk has been removed from the bank supervision process. It was
Solana's
very arbitrarily
back at entry, basically.
those who were supervised.
We could drop from here.
On January 27th.
We might just start dropping.
I'd call it the high water mark for Operation Choke Point 2.0. The Federal Reserve Board, in coordination with President Biden's White House, executed a coordinated attack to isolate the digital asset industry from the banking system. And while the Fed has taken steps to adopt a more balanced approach to digital assets, which I appreciate, the legacy of January 27th, 2023 remains with us today. So I'd like you to look at this quote. It says, issuing tokens on open
Not good.
and or decentralized networks or similar systems is highly likely to be inconsistent with safe and sound banking practices. So my first question is, do you recognize this?
Yes. Not super clearly, but yes, I do.
Because it's from the Federal Reserve Board's policy statement on Section 913 of the Federal Reserve Act, which was formally adopted by the board on January 27th, 23. So now, Chairman Powell, I want to show you another statement, and I'm sorry if you can't see it clearly, I'll read it to you. It's from the Genius Act, which just passed the Senate by a vote of 68 to 30 last week. And it takes the opposite position to the board's policy statement on issuing stablecoins on an open, public, distributed ledger. So my question is, what has changed about the risk of stablecoins since the board adopted?
Like, we don't even have a wedge or anything.
2023? And now that the Congress has weighed in, at least the Senate has weighed in and sent the Genius Act to the House, does the board plan to withdraw the policy statement on Section 913?
We're right there, guys.
So I think what has changed is, if you go back, that's a couple years ago, that was the period
Not
of
good.
high-profile failures and fraud and that kind of thing. And what's happened is, I think, the industry is maturing, our understanding is improving, and in a sense, it's becoming a reformed industry. So all of us are revisiting, the things that were done during that era. think the current view is that, that it's appropriate.
If you're on TikTok, hit the like and the follow button, guys. I can do this every single day for y'all. Today's obviously not the best day, but that's trading. Oh, we hit 20. Thank you. Thank you. VV Pro. I love to play game with content. Okay, let's do it, man.
And I appreciate that. I hope that by withdrawing
Might be
the
a
guidance,
bot.
that you're also investing in
It looks kind of body. VV Pro, are you a bot?
when there are efforts to regulate banks that provide too much discretion to bank regulators to pick winners and losers from among the customer lists of loan portfolios of banks. It's antithetical to the American system of banking. And I do think that there was that kind of discretion unleashed on banks, and it had a negative impact, a real chilling impact on banks as they selected and banked certain industries and then debanked other industries and other people during the last 4 years.
I don't like Solana right now.
Taking the guidance documents and policy statements out, but also guiding the people.
Yeah, this account really got fucked up over this.
And that they can no longer use their own subjective.
It really did, guys. It got fucked up.
DEI and ESG and other things in supervising the banks. It's also a critical component of bank regulation.
I agree completely, and as you know, Vice Chair Bowman is actually a former bank supervisor, so she's very well placed to make that happen.
And I realize that she as vice chair is more directly involved in bank supervision. I hope that you will use your role to punctuate the importance of those changes within the bank supervision function of the Fed.
We're going to move on.
Thank you.
Seems like it wants to drop, man. I just don't.
Good morning, Chair Powell, and welcome to the committee. So, Chair Powell, a few months ago, you issued a warning about the trajectory of our national debt. Speaking at a New York Times event, you said the U.S. federal budget
We made
is on
way
an
too many
unsustainable-
indecisive
the
moves
federal
today.
budget is on an unsustainable path. It's not only at an unsustainable level, but the path is unsustainable, and we know
Come
we
on.
have to change that. Would you still agree that that is true?
Yes, that's the one thing that I would always say, and that my predecessors would say, and that's the only thing we say about fiscal policy.
Exactly. And I would agree with that at a time when Americans are struggling to figure out how to afford their lives and have little confidence in the economy.
Not
To add
our
to the
day.
deficit now, as the big beautiful bill does, just strikes me as
And,
unsustainable. I'm not asking you to moderate.
I'm gonna be switching over to
Democratic
Top Step
policy differences
for
on, the
instead of
big beautiful
Apex,
bill.
guys.
Do you agree that the big
Just a
beautiful
heads
bill
up.
adds to the deficit based on the data that you've seen?
I'm just not going to comment on the
I just
Okay. Well,
a little
I
more,
would just point out to my colleagues
from what I
that the
hear,
CBO says
a little
it
bit
adds to the
better.
deficit. The Joint Committee on Taxation says that it adds to the deficit. The Yale Budget Lab says that it adds to the deficit. The Committee for a Responsible Federal Budget says that it adds to the deficit. The Penn-Wharton Budget Model says that it adds to the deficit. And even some of my Republican colleagues, Senator Johnson, Senator Paul, say that it adds to the budget. And as Senator Johnson says, it's wrong anymore. So I appreciate that you won't comment on any of this, but let me just ask you an economic question. Can you talk a bit about what impact a rising deficit has on our goal of lowering costs for Americans, especially in the Trump
God, this is so stupid, dude. This is just
What impact
ridiculous.
does a rising deficit have on our goal of lowering
Like,
costs
it's
for
just,
Americans,
it's
particularly
so
when we're in
undecisive back and forth. I don't want us to be bullish again. It's just like,
It's likely that the markets are pricing longer-term treasuries.
which way do you want to go, dude?
To that, in the markets thinking
And now Solana's at
what should be the appropriate
pumping
interest rate, but
again.
it's, it's hard to unpack that with any precision.
These are factors that have lots of interplay amongst between one another.
Yes.
Yes. And Chair Powell, could you just comment briefly about the sort of the potential risks of stagflation, where we have slower growth and higher inflation? I know this is something that the Fed guards against, and could you just comment a bit on the risks of that and what it means for regular Americans trying to afford their lives?
So we're not seeing that now.
Yep.
And it isn't really the base case that that's what we're going to see. But of course, that's a very difficult thing because, stagnant economy wants more stimulus, but an economy with more inflation wants less stimulus. So it puts the central bank in a hard place. We've warned of it, but it's honestly not something that we're facing or that we expect to face. But it's it's something we're monitoring.
Oh my God.
I want to follow up on a question I asked you the last time you were before the committee. I asked about the impact of severe weather events, otherwise known as
Drop.
on home insurance costs, and you testified that you said if you fast forward over 10 or 15 years, there are going to be regions of the country where you can't get a mortgage because of the impact of the challenges.
Oh
of
yeah,
insurance
we're
companies
sitting
just not being able to
ugly.
provide that.
We're sitting bad.
Since February, when I asked you that question, home insurance
We're only up 600. Not even kidding. This account was up $3,000, and then Juneteenth or whatever, we traded. Not knowing, I didn't know it was a holiday. That was like where it all started, man. And then the Iran shooting missiles at us, I thought it would tank the market. That was a horrible day.
Climate impacts, which is pretty stunning. Now, I realize this is a complicated issue because insurance
We missed the
is regulated
biggest
primarily
push to the upside all
though there are
week.
exceptions, flood insurance and terrorism insurance.
But it happens, man. This is trading for
I
you.
wonder if you would
Can be
comment on
extremely
your
stressful.
thought about what impact this has on
Trading
housing costs.
can be extremely stressful, guys.
Of inflation and a place where housing costs are rising higher than the general inflation rate right now.
Many things are driving up housing costs.
Yes,
It's
that's
not,
true.
It's of course mortgage rates, but it's also zoning costs and things like this for properties that are near the water. Particularly, for example, we spent some time down in Florida. Property insurance just gets more and more and more expensive, and to the point where it almost makes sense to self-insure. And that's because of just big losses. Companies are just putting that in their models and
Come on.
doing what they need to
Get down there.
charge to make a return. And if they can't get that, then they'll leave that state. So that seems to be what's happening.
I know I'm out of time. Mr.
Get
Chair.
down there.
That's why they call it development.
I didn't say that you weren't harsh as well. It was nice of you to do it. Like just right now. See? Senator Moreno reminded me not to give me that compliment. Chairman Powell, just want to make certain I understand this correctly. Control inflation and maximize employment. That's it. Two things, correct?
Yes.
So let's take one at a time. Maximize employment. Do you care if every American makes minimum wage or makes a livable wage? Is that something that factors into your thought process? In other words, we have full employment, but most Americans are substandard wages. Does
There we
that
go.
change your calculus?
Does it change my what?
Calculus. In other words, is it full employment is full employment? Every American has a job, but they're making minimum wage versus having a family sustaining wage. Does that matter to the Federal Reserve?
It would matter to the country a lot.
Does it matter to the Federal Reserve when you're making your decision?
Honestly, we don't really have the tools to affect that.
Right, so it doesn't factor in. Now that's different than us. The people of this country elect us to make certain that their wages are higher than inflation. And by the way, the records show that real wages are up this year.
Oh,
So we've done that, not the Federal Reserve. Second piece of
we're closing. Getting the fuck out of that.
We've helped control inflation, which is part of that.
We closed our Bitcoin trade, still in profit, but we're gonna come down to here.
There's different causes. There's not witnesses to inflation. There's key actors to inflation. Would you agree?
Like 143.
So let's talk about the actors. Did you comment during COVID lockdowns that was a bad idea? Meaning that you're
Yeah, that
shutting
too,
down
man.
the
This is
entire
just
economy?
fucking
not a fight.
stupid.
Hit the button, you can hear it. It's on and off. COVID wasn't that. We just shut down the economy. Any comments on that? Of course not. Okay, so you didn't comment. Vaccine mandates, something that my Democrat colleagues love. If you don't get the vaccine, you're a terrible human being. You can't go to work. In fact,
Oh, I might
Joe
short
Biden
this.
was overruled by the Supreme Court because he said that if you work in a company with more than 100 employees and you don't get vaccinated, the company has the ability to fire you, fire you, unless you prove that you're negative on COVID. That obviously is a supply chain shock. Would you agree? If I'm running an assembly line,
He makes a good
now I have
point
people
right now.
6 feet apart. Now I have people.
He's
quitting
making a really
not
good point.
to work or I have to fire them. That's a supply chain shock. Would you agree?
I mean, it's a medical thing.
No, but it's a supply chain shock.
George
I'm
Washington.
not asking you to make a medical decision. I'm asking you to make a Fed decision on inflation.
Way outside anything we would come.
But it affects inflation because supply.
It didn't.
Are you saying that supply
Didn't.
chain shocks don't affect inflation?
They do, but they didn't.
So that's clearly one. If you ban the export of liquid natural gas, which is going to cause the commodity price to go up, would that supply shock not also cause inflation?
Potentially could.
Yeah. So, and now the ranking member loves to talk about billionaire corporations, that are going to get away with paying taxes, right? Who pays corporate taxes? Like, who pays it? Is it like some obscure Wizard of Oz character behind a curtain that is a corporate entity that pays taxes? Who pays taxes?
I mean, ultimately, it's shareholders and customers.
So I'm going to read you a line. You tell me this actually on taxes. It's not possible to know in advance precisely how the cost will be shared for taxes. I have read. But it is highly likely that consumers will pay a meaningful share.
I mean, if we can start going bullish right here, it's just such a weird spot.
Let's just tax corporations at 100%. Why not? It'd be fantastic, right? Nobody wants to start a company, but that aside, that cost would be added to consumer funds.
Tax.
Come on.
What are you talking about now?
The income tax for American corporations goes up. They will share that tax burden with their consumers. True or false?
Yeah, ultimately.
Yeah. So then taxes do raise inflation, but you don't comment.
I mean, they have.
And you don't.
That's
But you don't.
not
I
true.
got to.
Empirically, it's not true.
The chairman's going to beat me up in 56 seconds. So, but you sent me a very nice letter, which I appreciate, and it says the Federal Reserve plays no role in commenting on trade policy. So you don't comment on supply shocks. You don't comment on tax policy, which clearly affects inflation. You don't comment on demand pull. You just said.
Oh, he's
now-
drilling Jerome Powell right now.
Why is a person that goes to Harvard, gets the gender studies major, pays Harvard obscene amounts of money because professors are grossly overpaid there? Is that person better than a working class Ohioan that is a plumber but can't afford a car because interest rates are too high and car prices have gone up? Why is that person? Why don't we forgive that person's car loan instead of forgiving their student loan? You don't comment on that. You comment on tariffs. So I'm going to just show you.
I don't comment on tariffs at all, actually. I comment on
Only
inflation.
commented on tariffs. You've
I'm
only
commenting
commented
on the
tariffs.
wisdom of tariffs.
The chairman's over there in conversation. I'm going to show you a chart here. This is car prices. This is car prices this year. Car prices are down.
Yeah,
Car
I
prices
sell
are down.
cars.
Inflation in America is down. We got elected by millions of
There we
voters.
go.
got elected by
There we
one
go.
person that doesn't want you to be in
Yeah,
the job.
I mean, my business, I
And you are
sell
costing
used
the
cars.
country
I
$400
totally
billion
get
a
it.
year by refusing to lower
Lately, in the last few months and stuff, like, I pay, it feels like the auction prices are going up, but then when you retail them, it's not doing the same. It's so weird and frustrating. Okay, what are we doing here, man?
Thank you, Chair Scott, and thank you, Chair Powell. Good to see you. The United States national debt currently exceeds $36 trillion. Last year, we paid nearly $1 trillion in interest on the debt alone, more than the federal government spent on educating and feeding our children. Chair Powell, how does the Fed consider rising national debt?
There is support.
Discussions
internal liquidity.
We really don't.
I feel
We
like
take fiscal policy as
down here
data
makes the
guidance,
most sense.
the data that's coming in, but we don't. We're never going to take into account budget deficits and things like that.
Well, here is my concern. Maybe Congress should be thinking. The world is losing faith in America's ability to repay our debt. We have seen a sell-off in the bond market. The United States dollar has lost more than 10% of its value against the euro and pound, and is down against nearly every single major currency in the world. Back in May, Moody's downgraded the U.S. government's credit rating because of growing debt and sinking confidence in lawmakers' willingness to address this issue. Historically, high debt pushes up interest rates, slowing economic growth and setting up a dangerous debt cycle where both interest rates and debt continue to rise. Chair Powell, how does the size and the trajectory of the national debt affect the Federal Reserve's ability to manage inflation in good economic times and spur investment and hiring in slower?
I'm happy to say that today those things do not affect our ability to do our job. The concern really is that if we don't do something, then there will come a time at which it will be a problem, not for us, but for the country. But that, at this time, it does not interfere in any way with our ability to
That is a realistic concern in the future, given the rate of
in the future.
increasing debt. And it's something I'm concerned about, and maybe because it's in the future, maybe that's why people who have power to sit in these jobs aren't as concerned about it as perhaps the Congress should be. I'm concerned about it as a father of a 6-year-old and an 8-year-old. I'm concerned that my Republican colleagues are planning to ram forward a bill that, according to the Congressional Budget Office, will increase the deficit by $4.2 trillion. So I want us to think about that. We're taking food out of the mouths of hungry children. This bill could cut as many as 16 million Americans off of health care. When we think about Medicaid, 71% of the Medicaid recipients in Georgia are children. So we're taking their health care and saying to children that you'll have to deal with
Come on, guys.
billions of dollars.
I know this is a very boring day, man. It's been a weird week, trading wise.
Budget gimmick to claim the bill only costs a fraction of that.
Okay, Solana's at London's lows right now. Didn't sweep it, it actually is right at it.
I don't think it will help my 6-year-old or my 8-year-old when the bill comes due on this. They know the truth, and they will react based on the truth. The big ugly bill will put the United States on disastrous fiscal path, and it will be catastrophic for our economy. Even worse, the big ugly bill is cutting
I'm
people
just
off
getting
of
out of this, dude. This is so...
So this is an interesting moment for me, for someone who didn't know I'd end up in politics, who just paid attention to politics over the years. They're getting ready to create a whole lot of pain.
We're gonna try Solana again.
And the question is, for what purpose?
Could be a mistake.
Tax cut up. I think
We
we ought to
closed Bitcoin.
prioritize extending tax cuts for the working class. We shouldn't be cutting their health care. We ought to save the country trillions of dollars by not giving more tax breaks to the richest Americans. And if we try to work together, we
Sui
can save our economy from
could be an
the threat,
option.
still protect working families.
Oh, here it goes. Good thing we got out.
I believe in tax cuts. I think working class
Okay, we do have a wedge.
ought to receive them, and that we ought not be burdening our children with all of this debt. With that, I yield, and
We're
the
breaking
chairman
out.
should take note that the Baptist preacher is done with 3
We
seconds.
broke out of the wedge.
And people said amen. Okay. Senator Hagerty.
Thank you, Chairman Scott, Ranking Member Warren, holding this meeting. Chairman Powell, it's good to see you here again. Chairman Powell, I want to talk with you about inflationary and deflationary trends in our economy and how they impact our thinking.
I want my Hail Mary trade mother.
Statements are hugely sensitive to the
Let this
inflationary
pull
risks
back low.
for our
And we're going to take it off the wedge.
And though I note that it's not the Fed's responsibility to attempt to steer or to directly offset that policy in any way, I look at that. I look at your perspective, but I also look at many of the other developments in our country that I think present the opposite risk, which is disinflation risk. And let me dig into this a bit. We're witnessing artificial intelligence adoption at breakneck speed. That's going to bring about productivity gains in nearly every aspect of our economy. We're about to pass a tax bill. That tax bill is going to encourage capital expenditures and long overdue upgrades to our manufacturing capacity, again, increasing productivity. And if you think about the concerted effort that's being undertaken by our federal government right now to reduce waste and bloated, unproductive government payrolls, all of these point to disinflationary productivity gains. So, given the competing sources of uncertainty that we're talking about, it feels to me like the Fed's far more focused on tariffs and the inflationary impact of tariffs than on the deflationary impact of the points I just mentioned. So, if the uncertainty around tariffs is the primary reason that impacts your thoughts, I mean, how do you counter? How do you bring into account these disinflationary trends that I've just mentioned?
We do look at the overall picture, and that's actually what's been happening is services inflation has been coming down, and that's been covering what we see so far, small increases in goods inflation. I would also mention a factor that you didn't mention on your list, which is regulation, which is an area which could also be over time disinflationary. So we do that. I mean, I try to say that it's the broad sweep of policies and the broader economy that matters for inflation. I get asked about tariffs a lot, and that's the one where all forecasters are expecting.
Let's just pull back to the
significant increase
line.
now and the end of this year.
We're going to try
We
it.
don't know how big it's going to be. We don't know when it's going to come, but it's just something that we're waiting to see more information.
It did break out of it.
Decision on interest rates. That's all it is.
I hear the discussion about not knowing the magnitude and the timing of the trade talks.
Did break out.
Tariffs that will ensue. It does seem to me that there's a bias toward viewing this as more inflationary than deflationary. Now, I'd like to ask you this. If Ambassador Greer is successful bringing the trade deals together soon and alleviating that uncertainty, would that do to your perspective on rates? Would that put you in a position to think more aggressively about lowering rates?
Yes, potentially it would. I mean, really, it's reducing uncertainty would help, and also just what's going to be the final tariff rate and getting that settled. I think that's the path forward.
I think that's welcome news. I think the markets will welcome that as well. But I do believe that we're on the path, as you're about to say, of having some significant resolution in trade uncertainty. We've lived in an unbalanced world for years. The United States has had the lowest tariff rates. Other nations have taken advantage of that. Jameson Greer and his team, Scott Bessent and his team, the president, everyone is making a concerted effort to fix this. So I'm looking forward to that. One other area I wanted to touch on because it's close to home, and that is legislation that this committee has just passed out. We just passed the Genius Act. We just passed it last week, and it provides an urgently needed regulatory framework for payment stablecoins, and it requires that they're backed one-to-one by cash or short-term. Over the last 5 years, the total value of outstanding stablecoins has increased from approximately $4 billion to over $2 billion today. One market participant has predicted that
How's everyone doing today? Hit the like and the follow button if you're ever on Twitch or TikTok. We do this every single day. I know today has not been good so far. That is the reality of trading, guys.
What impact would this new source of
If you think every day is just going to be win-win-win, you're sadly mistaken. It is not going to always be on your side.
Really have a sense of how big that effect would be, of course. And let me just say that it's a great thing that we're making progress toward a stablecoin framework.
Thank you, Mr. Chairman. I couldn't agree with you more. The direction clearly is it's going to drive rates down. I think it's very positive for the economy, positive for our cost of borrowing as a nation. And I appreciate your response there, Mr. Chairman. Thank you very much. Yes, sir.
What happened when we broke that wedge? The problem with this one is we're going down at the same time.
I'm concerned about that as well.
Do I trust
My question
this?
to you, are there specific research projects that the Bureau of Labor Statistics provided that they no
Not
longer
fully.
provide, that the Federal Reserve researchers cannot replicate on their own or through other sources?
I'm not aware of any.
Okay.
It doesn't mean they don't exist, but mainly it's the regular data they supply. And as you know, they've cut back on the size of that survey.
Right. So, I would hope as we move forward, and not just in today's hearing, but if there is some other data, or you're relying on data that you're not getting, or there's now another source for that data, I would please share that with the Biden administration,
Sui.
Federal Housing Finance Agency, and the Federal Reserve.
Sui could be good right now. I mean, depends if NQ wants to start pushing up.
I can't speak to the FHFA. I can speak to the fact that we're really looking carefully at modernizing the discount window and making.
But we're not there yet.
It's going to be this is a project that will take some time. It's the discount window.
Do we have major news tomorrow?
From a technological
Final GDP, yeah.
people can
Unemployment, we got, yeah.
It's still a little bit behind the age in that respect.
Do you have a time frame you're looking at
I'll get back to you. It's something we've been working on.
or is there a funding impediment that is also
No.
addressing this?
No.
Oh, okay. If you could,
We're moving ahead with it. I'll come back.
okay.
Oh, I'm so happy we didn't get in that.
In March, the Federal
And there goes the drop we were waiting for.
announced that you all intend to repeal the 2023
That's exactly what we're waiting for. And I called from the beginning.
I prefer the proposed rule as it would better address the needs of states like Nevada that don't have headquarters for large banks. How will you ensure that the new
This is-
CRA guidance improves access to financial
Sui's dropping now. Salon's dropping now. Salon's gonna hit
underserved
stop loss, I bet.
tribal communities?
I think in March we announced that we're going to be putting out for comment a proposal to withdraw the proposed guidance, which has been the subject of litigation. And in the meantime, we're going back to the old CRA rules, and I think that's where we will be. I don't have anything
Bitcoin's
more
breaking
that
support.
might, change with
Break a
respect to
structure.
the old rules, but that's where
So the
we're going.
default are the old rules,
Yes.
and that's those may be
CRA as it existed before this proposal, which actually never took effect.
right. Okay, that's helpful. Community banks benefited from
A lot of
high
selling volume
debt.
coming in, guys.
Since then, the net interest margin for community banks has fallen. What specific challenges do you see for community banks, if any?
Community banks.
Let's see if we can get the
very
pop
important.
off.
We want a banking system that has all different sizes and shapes of banks, and community banks are.
Let me get above
absolutely
that
critical. They know
stupid
what's going on in
little
the
wedge
area
line.
in a way that that the big
Nope.
banks can't possibly. So they're a critical part of our infrastructure, and I think they've been under pressure because, frankly, regulatory costs and fixed costs of regulation have gone up. We try not to contribute to that. The number of banks has been going down pretty steadily, and that's not something we're trying to foster, but it's a sort of long-run trend of really the last 30 years. So we try not to add to what is a secular trend because we think they're important.
Thank you. Thank you for being here. Appreciate it.
Thanks.
Ms. Chairwoman, I yield my time.
Senator Britt, thank you very much.
Let's
Madam Vice
go.
Chair. Al, thank you for
I don't
being
wanna
here
risk
with us
anything.
today. I want to start just with the comments of Senator Cortez Masto when it comes to community banks. Obviously, we believe that community banks and credit unions, financial institutions that serve everyday Americans
I know, sick.
the great state of Alabama and our country are
That's funny.
being able to actually achieve the American dream. And want to make sure, I know we've talked about this the last few times you've been in front of us. We've talked about the rewrite of Basel III. We've talked about
Now it
that.
goes.
We've talked about
Gotta be kidding me.
my concern that no one was looking at the cumulative impact of these things and the trickle down effect. I just want to get a commitment from you that as you are reviewing
And
this,
Sui.
that you will consider and make sure to make the perspective of the smallest U.S. banks and non-financial
Let me try it.
like the ag sector who did not maybe have a seat at the table
Let's see if it bounces.
Accessibility, reliability,
Salon too.
childcare. It is said that anyone who has a child who's 0 to 5 actually spends 22% of their income on childcare. We have done the studies and looked at the numbers, and 59% of stay-at-home and part-time working parents say that they would like to read and course, but that affordability or accessibility is an impediment to do that. As we are looking to build back America, as we are looking to create opportunity, and bring those things into would you agree that taking a look at being able to address that has been able to come up with a specific proposal, but addressing some of the shortfalls
We should have stayed in this train.
long-term impact on the economy?
We should have stayed in this, guys.
Quite a bit of
Fuck.
research showing exactly that, and we really saw
Fuck,
it during
dude.
the pandemic.
Because it's already 20 points.
An issue that we play a role on.
We're gonna wait for the pullback.
It would contribute
Nothing without faith. If we get to here,
Absolutely, and this Alabama lease week will
could also be a short.
it is
I don't know. I think it wants to pop off.
and know that addressing this head on will help us be able to achieve that. So thank you so much, Drew Powell. I look forward to continuing to work to get that done. So there has been some angst vocalized about the reconciliation bill and the president's trade policies, and from my perspective, much of that skepticism is both unfair and premature. Market resiliency and recent economic data actually continues to reflect confidence in the U.S. economy.
I'm gonna sign up for Top Step today, guys. We're gonna try Tops. I mean, obviously we still have this Apex account, but we're not doing as good. We still can make a big comeback though. We're up 527. We gotta make a comeback on this though. I mean, we're still in profit. We're in profit, but we got to, I mean, we were way more up. This week has been bad. See, that's one thing about me, guys. I'm not gonna just send or post and go live when I'm only winning. It's just, if there's anyone that only posts videos and they never lose, dude, unfollow them. Because it's all bullshit. Okay.
In terms of the strength of the economy, I
Here comes the pullback.
the labor market's in a solid place. The economy's growing. Inflation is in a pretty good place, coming much closer to 2%. So it's a very solid economy. We are watching the labor market very closely, as we always do. And a couple of things in particular. One is just a very low hiring rate, which goes with a low layoff rate. But if we were to start to see layoffs, we would see unemployment go up quickly. And so we're watching that carefully. But we really the labor market has remained solid, and I would agree with you with overall characterization.
Thank you. Appreciate you being here today.
Senator Kim.
Yeah, thank you, Chairman. Thank you for coming before us today. You've often said in the past that when it comes to monetary policy that it works with a lag, right? This is something
We need to
have to
get
try to assess the data that's before.
down
I'm thinking
here.
about this because we have the Federal Open Market Committee, FOMC 5-year review, and you were talking about tariffs and the uncertainty of this moment. So I guess I just wanted to ask you, how do you balance sort of assessing between more of the backwards-looking data that you're able to look at more tangibly in that way, but also addressing sort of forward-looking models to understand where things are headed?
Yeah, that's really the challenge that all forecasters have. And really monetary policy needs to be forward-looking. At the same time, we need to be humble about our how hard it is to forecast. So, particularly at times of high uncertainty, which I would say I would include now, you really want to look at the real data and take signal from that, and not be too brave about what your forecast might be, because it's going to be highly uncertain.
So you're saying that in times of greater uncertainty, in some ways that makes you more interested in the backwards-looking data to sort of guide you?
I'd almost flip it around. Yes, but I'd almost flip it around and say, at a time like that, you don't want
The chat on these are funny.
you don't want to be acting as though you have like certainty. It makes sense to move more slowly.
much uncertainty right now in the world and certainly in her life that she says it's hard for her to even breathe sometimes. She just feels this kind of weight upon her chest. And I've thought about that a lot because I try to think through what can we do to try to alleviate that concern, alleviate that anxiety for people. But you can see it. I mean, right now, whether it's about what's unfolding in the Middle East and the fragility of what comes next, when I look at this reconciliation bill before us in the Senate, I do worry not just about the deficit.
What's up, everybody on TikTok? Hit the like, the follow button. We need as many likes and follows as we can get, man. Now I go live for you guys every single day. All I ask is to hit the like and the follow button, man. NQ was not our friend today, unfortunately, if you're just tuning in. But you can watch the YouTube video later.
Talking about legislation here, I know you're not going to go into the policy per se, but if there's a potential for significant job disruption, is that something that you're looking into as you're forecasting?
Shocked.
Yes.
Not even any views on that. That's crazy. This one got partially blocked. I don't know why. This one did good. 128. Oh, we just got a view on that one. YouTube's a beast, man. It takes time. It takes a lot of time. Consistency. I'm still waiting for that Hail Mary trade. We're gonna catch it, boys. We're gonna catch it.
I wanted to ask you because the central banks in other countries, including the Bank of England and European Central Bank, they've begun modeling the potential macroeconomic effects of artificial intelligence. They're thinking about how they can use AI to be able to do some of the forecasting, to think through what comes next. I guess I wanted to get a sense of what the Federal Reserve is thinking in terms of similar work in the AI space.
We have lots of people doing work on AI and more than that, even monitoring research that's going on everywhere in the world. And speaking of uncertainty, it's very clear that it has the potential to make really dramatic changes in our economy, in our workplace, in the jobs of workers, in the way companies work, and all of those things. But honestly, there's tremendous uncertainty about the timing of that and what the ultimate consequences will be and what the medium-term consequences will be.
I was wondering if the Fed is evaluating AI credit models and how that could potentially deepen disparity in credit process or violate fair lending standards. Is that something that you've looked into at this point? And
Yes, absolutely.
is the Fed looking to potentially affirm some industry standards on this?
It's something we've been aware of for a long time. There's a lot of research been done before generative AI came along. It was also just machine learning and technology generally. Your implicit biases that can appear. It's something we're very well aware of, and we do work with people to make sure that doesn't happen.
Thank you. I yield back.
See, everyone got hit thinking it's gonna. Well, I don't know. Just hit trend line. He's short. Boom. Playing out already. I guess that could have been okay.
At the higher end.
How does that affect the United States?
Well, I think that reflects a couple of things.
Phone.
One is just that the U.S. economy is.
A bitch hit when I'm on my phone. So I got me on my phone. That's kind of a funny line. I ain't gonna lie. My bitch hate when I'm on my phone because I got me on my phone. Today's gonna be a great day, even though we lost today. Got my dealership, and I'm moving all my cars today.
Can you talk about historically where we matched up with other countries?
So let's just go back to when the pandemic hit, for example. We were at, we had very low rates during that year, but they were by far the highest in the developed world because the U.S. economy was the strongest. The European Union had negative rates. I think the was 5 basis points. We were at 2.4%, so we were meaningfully higher. And again, it was a time when we were just our growth was higher, and
breakout.
We have the strongest economy.
We're trying this.
Globally gone up as well.
Sorry.
Have interest rates in those countries globally gone up as well?
Well,
I want to see the breakout.
all of those countries had their
Might not get it though.
quite a bit
There it goes.
during the global
Come on, baby.
pandemic.
Push up.
Right. And
Come on. Get above that
cutting
stupid
and we have
line,
been
that
too.
trend line.
And, we'll at some point resume that. But we're 100 basis points lower than we were. I think if you take the EU and the Bank of England, they both cut a little more than that.
How recent?
Recently, but but I think you probably read this, but they're either at or close to the end of the cutting cycles.
I know there's been a lot of talk today about deficits and the national debt. But how much does tax policy affect the economy in the U.S.?
I mean, it has big effects over time. It's really not something that drives what we do. It isn't. But I think tax policy plays over the long run a huge role in incentivizing investment, which helps growth and things like that. I think it's very, very important over the long run. Certainly more important than
There we go.
Would a $4 trillion tax increase on middle class Americans affect the economy?
Now, here we're getting into the bill.
I understand. I'm asking how that would affect the economy according to your data.
I'm trying to not make any direct comments on the bill today, if you'll forgive me. But
I need to go get ready for the day. So I'm hoping this trade hits and
But there's got to be data
get some money back.
somewhere that suggests that large tax increases would affect the economy, would stall economic growth in the U.S.
you could certainly get that out of a model if you wanted to. I mean, but again, I'm inevitably going to be commenting on the bill, right? If I answer that question, so
So a lot
rather not do that.
of talk today about inflation. You've already agreed that inflation is down from where it was a year ago, and would you say steadily declining?
Has been, yes. I more than agreed to it. I'm very pleased by it.
And all of the experts and so-called experts tell us that tariffs lead to inflation, but you seem to have suggested already that inflation is, if not under control, close to being under control.
So the inflation's in a really good place. It is definitely in a good place.
this song's hard.
We have a forecast, and so does, by the way, every other brand name forecaster in the country, very similar to ours, that there will be some inflation from tariffs coming, not yet, but over the course of the coming months. And I think it's reasonable to expect that because someone has to pay. This is hundreds of billions of dollars of tariffs we're taking in. Some of that's going to fall on the consumer. Not all of it's going to fall on foreign manufacturers. And that's the only insight we have.
Oh man, this is gonna be a boring YouTube video today, guys.
Our trade deficits with China, the EU.
I'm sorry. This is not an exciting day, I can tell you that.
Recently, what does the data tell us about that?
Suey and Salon is just sitting there in the support.
How would it affect inflation?
But Market Cipher,
Implications for inflation.
Vu Manchu, whatever, is calling
Recently, you've seen China
a buy.
come down.
Thank you. I yield back.
Thanks.
Thank you, Mr. Chairman and Ranking Member Warren. Chair Powell, welcome back. Inflation has come down meaningfully from its peak, and there are signs of moderation in the broader economy. But prices for rent and other essential services remain high, and the outlook is still uncertain. Wage growth remains strong, but productivity trends are mixed, and demand for places to live is high, but borrowing costs and material shortages are making it harder for builders to keep up, adding to the affordability pressures. And at the same time, while I know this is not something you would say, but at the same time, while our Republican colleagues are pushing for tax cuts for the wealthiest Americans that would expand the deficit, the administration's trade and immigration policies are also introducing uncertainty that may not yet be fully reflected in the economy. For families that I represent,
Hit the like and the follow button if you're over on TikTok, man. I do this for you guys every day, every single day, man.
Later this year, the Fed will update its monetary policy
Money, who really loves me?
and after years of supply shocks,
That's all.
fiscal volatility, I hope
Need.
that the Fed's ability to navigate the more uncertain economy. As you undertake this update, can you talk about how you're adapting the framework to these realities while preserving the Fed's commitment to full employment?
I'd be glad to. So we made changes in the year 2020 to our framework, and those were meant to take on board the special issues that a central bank faces during the era of extremely low interest rates, where rates were never very far from zero. In fact, we just barely got away from zero when we had to cut back to zero, and the feeling was very much that if we had any kind of a shock, we'd be back at zero for years on end again, and that's really not a good thing because the economy can become very stagnant. What happened since then, the big thing is interest rates are back to much more normal levels historically. So our policy rate at 4.3% actually doesn't feel like it's particularly restrictive. So in other words, rates have moved way back up. That means that the effective program is less of a problem. It means that the changes we made in 2020 are less relevant. They're not completely irrelevant. So we're making modifications, which we'll be discussing inside of our committee between now and the next meeting and in the next meeting, that will return the forecast more to what it was before the 2020 cycle.
I know we had a chance to talk in the past about my focus on jobs and the economy and labor. And I want to follow up on Senator Kim's questioning, where the focus on the changing technology landscape and with artificial intelligence, generative AI, and just its impact on the economy and labor market. How would you describe AI's impact on the economy so far, and how is the Fed measuring it?
The effects of AI are probably not great at this time. Generative AI, and the question is how great will they be, and how big will they be, and how quickly will that happen? And if anyone has been exposed to what AI is capable of has to be pretty stunned by what it's capable of. And this is even
really slow, guys.
in 2 years, these things that you're doing, that'll be nothing compared to what we can do in 2 years. So I think it has enormous capabilities to make really significant changes in the economy and the labor force. And it can either augment people's productivity, or it can replace people, or it can do a little.
This
bit
is
of both.
very slow.
It's going to be something.
Salon and Sue are in the same boat, just sitting there. Yeah, guys, I don't know. This is.
AI could, quote, wipe out half of all entry-level white-collar jobs and spike unemployment to 10 or 20%. I think it's in like a matter of a year or two. Do you think this is a reasonable perspective, and how would AI-driven productivity gains or worker displacement affect how the Fed defines full employment?
Shit.
I don't know whether that's.
Shit.
I'm not the person to say how quickly that will happen. What's happened before with technology is it just seems to take a long time to be implemented. The technology is what it's capable of. Here's what it actually is when implemented. That last phase is going to take longer than people expect. Will it happen with AI? It probably will. But in terms of employment, we don't. The Fed doesn't have the tools to really.
I mean, this is the play. If this don't hit, we're done. This is like the last play.
We'll always be able to balance the labor
There we go.
supply and demand are in balance, but things like what AI does and what other things do from the outside, we just have to take them at
Okay, Bitcoin did push up. That's on the pullback. Here we go. If we can get NQ to 490, I'm cool with that. ROI was through the roof, so I invested more.
Transition
question is very, I think, very important to know. I want to talk about SLR for a minute. I think
Big
you
pullback.
all indicated the balance sheet is going to continue to shrink. We're not going to get to pre-COVID levels, and which was, I think, somewhere around $4 trillion. I guess the question is, you guys expect to hold higher levels of central banks to hold higher levels of central bank reserves than we have in previous years.
I don't think we'll get all the way back to where we were, but we're still shrinking.
Is it fair to say that the SLR should be updated to reflect the evolving preference?
Yes.
Thank you. Fed now. It costs $545 million. You know, Chair Powell, I've never really liked Fed now, so it's probably not a friendly question. But spent $545 million to implement it now. I think you're expected to spend another $245 million in 2025. So the total price tag is $1 billion. As you know, the Money Control Act requires the Fed to cover all the direct and indirect costs actually incurred. So can you give me an idea of when we're going to see a fee structure that's going to generate and actually pay for this implementation? And we expected ongoing operational costs.
You're right. That is our obligation.
Yeah. We broke even on it. I mean,
We have a period during which that's supposed to happen. Uptake has been steady but not rapid. And
Is it your
usage
sense that you're going to be able to get to that, and the fee structure that you're going to need based on that take rate is going to be achievable?
I think it's probably still achievable. I'm not 100% clear that we're going to achieve it very soon.
I mean, yeah, that's what I'm concerned, and I wonder if that pricing is there given private sector options, if you're ever going to be able to get there. So just an editorial comment. One thing I did want to mention, I'm excited to see some of my colleagues on the other side of the dais concerned about the debt. Because last time I checked, over the 4 years that President Biden was in office, we had the American Rescue Plan that cost us $2 trillion. We had the Inflation Reduction Act that cost us $1 trillion. And we had the PACT Act that me and my colleagues, I was one of 9 Republicans that didn't vote for it, that also cost us $1 trillion. So I'm excited to see that my colleagues on the other side of the
food.
I did have a question, I think, on for my staff wanted to ask.
Motherfucker.
I actually wanted to go. I don't have it before me, but what's the current status in your view on Wells Fargo's capital requirements?
On their capital requirement, well, you mean on the, I think you mean on the gross cap?
Yeah.
Yeah. So we voted unanimously to remove that after many years of having it in place, they did satisfy the requirements we put in place, and we removed the cap along with the other agencies.
And you think your fact-based decision, you stand by it?
I do.
Last thing is Walmart.
I will not lose.
Walmart on April 9th.
Except on NQ today. But in general, no. Never. We only win. We only win, guys.
I don't know if you can respond to this or not. I won't ask you a tax question.
Oh, we got a new follower on Twitch. What's up, what's up, what's up? Thank you. What's up, Frey Allerson? What's going on, my man? Today is not a good day for us on NQ or crypto yet. Yet. Mark my words, I'm saying yet. You know that I bounced back? Odie. Don't sack peace. Coming back. Sometimes you know that I bounce back. You know that I bounce back. What's going on, man? So we go live on TikTok, YouTube, Twitch every morning, my guy. We trade crypto and NQ. So we just took a long on Sui and we're on a long on Solana. NQ got us hit a few times today, though. We did not do too well on NQ today. Like, even this trade right now, I'm like, I should get out of this. This is garbage.
You can't respond to this, but I will tell you, if the Democrats succeed in preventing us from avoiding the biggest tax
Unless this candle wants to pop.
it is going to cause
I don't think it does.
people who can least afford it. You don't get to respond to this from the folks.
Senator.
Oh, I'm sorry, I didn't realize she was here. I'm sorry. But we need to open that. We need to be open. We need to understand that you will have something to say.
Fuck
if you
this.
fail to
Ah.
continue the tax cuts.
Thanks, sir.
Thank you so much. First to Chair Scott and Ranking Member Warren, thank you so much for hosting today's hearing. We thank you also, Chairman Powell.
Almost like, should I just short? I mean, fuck, dude. This is not. Yeah. Oh, we'll be fine. We'll be fine. Crypto's about to boom. Yeah, see, look at Sui's about to push up. Sui's about to push up. And Sol. And Solana. We're about to push up. I can see it on Market Cipher. Maybe. We'll see. We'll see. But I think I'm done with NQ for the day, guys. You know that bounce back? You know that bounce back? We're on TikTok. You guys haven't hit the follow or the like button on this whole stream, man. That's crazy. Crazy. But if you guys are really wanting to learn how to trade, TikTok, YouTube, Twitch, DM me. Also, in every YouTube video that I post, it is in the descriptions, my links for everything. If you click on any of these videos, boom, all my links. You can follow me on everything. Every platform is all in with Mitch, and here's my Discord as well. We're still building it up, you know, obviously, just like the content. You know, we've only been doing this for a few months. We're staying consistent. But if you really want to learn how to trade, I can give you access to the scanners, all the educators, crypto, forex, e-commerce, social media, full schedule, all day long. I mean, this is who I learned from. These are certified 7-figure, 8-figure traders and investors. These are real deal traders. This guy is Jason Bowman is a hedge fund man. He trades for a hedge fund, manages millions of dollars in trading, and he trades US 30. And then he made the scanner Kill Shot. He created that because it's his style of trading. Let's see what Kill Shot's saying actually, guys. For oops, it's on crypto. It does everything: crypto, forex, indices, everything. For some reason, you always gotta do this. You gotta open it up like this. So, called a short way up here. It has not called anything else. But if you would have just took the short just off this, I mean, that would have hit majorly. I mean, look how much this went. 74 points. We should have just took that trade off of that, guys. Shit. So, if you guys are really interested in joining the best community team when it comes to trading and investing, man, just hit me up. He's from New Zealand. Oh, I'm in the US. Yeah, I'm in the USA. I appreciate the follows, guys. I don't know why you got New Zealand. I'm in Portland, Oregon, in the United States. So I day trade full time. I also teach people how to day trade, obviously, but then I also own a used dealership out here. Yeah, I sell used cars. I have a car dealership. Out here in Portland, Oregon, obviously. But I have people come, like right now I have the classic Mercedes-Benz hardtop convertible. And I might have a guy come from out of state to buy it, you know. You never know. You got people coming from out of state for cars sometimes. So, for me, it's the perfect combination, man. I had a mentor back in 2022 tell me, once you start making money from trading and investing, find another business to put the money into, and then that money grows. And cars was my go-to, because I used to work at a dealership, so I know the ropes, you know. So I started going to auctions for myself, buying and selling cars. And then also, over on TikTok, you can follow me, All In with Mitch, for trading stuff, but I also have a TikTok for cars. And, you know, teaching people how to get a dealer's license or blah, 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 right? It's called Flip That Whip. Or let me double check. Yeah, I believe it's like Flip That Whip. I'm streaming on TikTok, so I can't check. Yeah. That's what I tell people, man. So, my YouTube page, I'll show you guys. You can see a lot of videos on here. Every day I post a video. You guys can come watch it. I needed to make more content based around just strategies and stuff. I need to make more content around strategies and teaching people stuff, right, in trading. But here's the thing is, and go follow my YouTube page, All In with Mitch. Every platform, All In with Mitch. All one word. Instagram, X, YouTube, Twitch, TikTok. And I want to create my content eventually. I want to make it like financial education, man. Teaching people how to leverage credit, how to make LLCs, how to become your own fucking boss, man. Live life on your own terms. No one wants to be slaving at a 9 to 5. I already know this, especially the new generation. You guys have to understand how money works and how to leverage money. Use it as a tool, not something to go blow on random shit all the time. Like right now, dude, I don't even have a personal car. I just drive whatever the fuck I'm selling. I don't care. You know what I mean? I could go buy some top of the line BMW or Mercedes or whatever, but I choose not to. I just put my dealer plate in whatever the fuck I want to drive every day. Because I don't care. I'd rather grow my money than try to impress people. I'm confident who I am. I could be in a fucking 2000 Subaru Outback more confident than half the population. You see what I'm saying? That's my point. That's the shit I'm talking about, man. I'll pull up on a girl in a 2005 Subaru Outback and probably pull her. Because I don't need... Trust me, I've had plenty of nice cars. I mean, I've had all types of shit. But, I mean, it's not like I'm driving buckets. I'm driving nice cars that I'm selling. But I'm making a point, dude. I don't need to go buy a $50,000 BMW or Mercedes just to impress someone, man. I can get that shit if I want to. Not a big deal to me, man. I'd rather make wealth. Financial freedom. That's way more valuable than material shit, man. This gold chain and shit, I don't care. This watch, I don't care. It makes no difference to me, man. I don't need it to, you know what I mean? That's all I'm trying to get at. Too many people are so focused on the material side of shit when they should really be focused on creating financial freedom. Because you know how many people start making money, they start a business, they start making money, they start blowing more than they're making, and they go under. I know it's a very common thing, especially a lot of people trying to live in Miami, trying to impress everyone. Miami, from what I hear, is just a trap. Because especially if you're like just starting to make it, and then you're like, I'm gonna move to Miami. A lot of times they go under, man, because they're trying to keep up with an impression out there, it's it's a bigger deal, you know what I mean? Out there is, you're competing with some heavyweights out there, man. But there's also motherfuckers out there that are running off of a bunch of credit lines, and they don't even really own the shit that they're driving or renting or whatever, man. And then they get buried. That's not the way you want to do it, man. You know the guy that created Nike, and this is a great book called Shoe Dog. Phil Colton, the guy that created Nike. He did not pay himself for 5 years. And then even then, he paid himself a very small amount. And look how, the dedication. Elon Musk lived in his office with his brother when they created PayPal. And they just grinded. They were showering at the YMCA. A lot of people don't even know that. And even to this day, Elon Musk lives in like a little 3-bedroom townhouse, the size of the townhouse I just had. Same thing. Right next to Tesla and right next to SpaceX. He has like 2. And he just lives close by. And it's just a real basic 3-bedroom. He don't care. You know what I mean? I made artworks. Okay, I need your help, Frey. Yep, I am. Yep, let's talk. I know you can't. Can you DM me on here? Dude, here. Hit me up on there. There's my number, bro. Hit me up. Send me a text. You read my mind. I'm looking for someone. I'm also looking for someone to help me with content, videos, and stuff too. So, hit me up, bro. You got my number. Yeah, my Discord. Here, hold on. Well, I can't get the. Hold on. Hold up. Hold up. This is my private this is my Discord channel. But my name on Discord is the same name, All In With Mitch. Same name, All In With Mitch. Same on everything, All In With Mitch, bro. But join my Discord. I'm trying to grow it, It's obviously about trading mainly, but... I think we gotta close this trade, man. This is ugly again. This is not giving it to us, guys. I need to charge this speaker today. Done forever. Yeah, hit me up on Discord, bro. Send me a... Is this you? Oh no, this is someone else. Oh wait, what? Invalid invite. Hold on, that Discord link says invalid. It's weird. I use ChatGPT to make my descriptions. I'm wondering if it fucked it up. Messed up my links. Sometimes it does that. Be jealous. Okay, Suey's going. Yeah, yeah. Hold on. Hold up. This is some other guy that wanted to add friend. Oh, I see who he came from. Hold up. Send friend request. Boom. Okay. I sent it, bro. And when I'm streaming, I can't get my link from my channel. See? It won't work. Oh, wait. I do gotta get going, man. This trade needs to figure itself out. I sent you a friend request, bro. Alright, guys. I'm about to take off. I gotta get my day going. This is just chop bullshit. This is just ugly. We're gonna let these crypto trades run, and I gotta get going, man. I gotta start my day. I got a lot of cars to move and a lot of shit to do. So I appreciate y'all, man. We're gonna get going out of here. Yo, there we go. All right. Okay. So, guys, I gotta get going. Appreciate y'all. You guys have been great. Thank you for the invites. We're gonna end it here. Make sure you hit the like, follow, and subscribe button. YouTube, Twitch, TikTok, Instagram, X, all in with Mitch, all one word. If you guys want to learn how to trade, DM me on something, figure it out. We're here every morning, 6 a.m. to 6 a.m. Pacific, 9 a.m. Eastern. You know what time. So, oh shit, hold on, guys. We might come into this support down here. No, man. Myself because I'm selfish, yeah. We could get a pop-off from here, guys. We should have took the short when it broke the orb, man. Like, you know our strategy, man. Breaking the orb and going for it. But this is what confused us. We came right back and hit the 50% of the orb and then dropped. But I should have known here to take it. I know better. I'm better than that. I should have shorted when it broke the orb, guys. See if we can get a pop-up from here. Might be able to get a pop. Might get a pop. Or not. Let's see. It's all for you. I'm selfish, yeah. Pop up, pop up. Push up, come on. Push up. Tight stop loss, guys. Let's get a pop-up. I mean, we're just milking these little $100 trades left and right, which is fine, but we need a big Hail Mary. I need $1,000 trade right now, man. I don't want these little $100 picks. I want a thou wow. I want the thou wow. Okay. Like, whoa. Like, whoa. I would play music on here, but every time I do that, the videos keep getting banned and shit, so... Sorry, guys. It's been banning the videos. It's pretty frustrating. I know something. I think if I go to bird. Okay, we're at break even. Let's see what happens here. This could be a fake out candle. Looking from the glitter. The glitter. Glitter. My money glitter. Alright, that's shooting you right on that. Spirit. Blind, deaf, up crazy and money over bitches. Money, baby. Oh, get that money, baby. That blow and call it baller. What you talking? Oh yeah. Yeah. Okay. I like it. Freya. See, this is why I love doing this. You never know who you might meet and stuff, man, that can help you with things. It's cool, it's cool. I love connecting with you guys, and, like, you know, this girl is on my Twitch just now, and she does logos and graphic design, stuff like that, which I need help with. I also need help with video content. I want to make better videos and stuff, so I'm, and then logos, banners, and stuff for my car dealership as well. You know what I mean? And I'm about to go hard on that as well. I'm going to end the TikTok stream. It's not doing too well today. This is crazy. I feel like I'm getting shadow banned on TikTok, guys. I used to have 500 to 1,000 people on my lives, and, like, I don't know. It's really weird, the difference I'm getting. I don't know why, because I'm posting every day too. It's super, super weird. So when I got out of my relationship, I didn't go live for like 2-3 weeks. And then obviously I got set up where I moved and started going live again. And I've just noticed ever since that 2-3 week break I took of going live and videos, I don't know, it's just been a slow climb back. Sucks. Definitely sucks. So neat. But I'm not gonna stop. Never stopping. We never fold. Never stop, guys. Okay. I like it. Follows everywhere. So I'm the truth, Holmes. Yep, Tupac. Tupac. You want some? Just closing up. Okay, guys, I gotta get going. I appreciate y'all. DM me, hit me up if you want to learn how to trade. Today was not our best day. I bet you this is gonna break out of this wedge. I bet you. It's holding. But I just can't sit here forever. I got a lot to do today. And it is what it is. Let's see here. Yeah, we're still in the same boat. Didn't really change much. We're just clipping little $100 trades here and there. It's lame. If we break out of this, man, I'm gonna try this again. We need to explode right here, or else I'm just getting out. We're starting to. Pump fake. Yeah, pull back again. This is just so fucking slow and boring, guys. This is stupid. It has to really bounce right here. Okay. It's dropping now. It's gonna sweep. It's gonna tank. Okay, we're done for the day. We're just over this. Alright guys, I appreciate y'all. Today was not our day. It's all good. It is what it is. I appreciate y'all for the follows, the likes. Keep watching every morning. Alright guys, peace out.